On this channel, we're big fans of the FIRE movement, which stands for financial independence, retire early, and the most effective way to retire early or comfortably is through passive income. Now, there are several ways to do this: buying and renting a property, passively starting a business, etc. But we're very interested in investing, and that's what we're going to focus on today. One of the best ways to maintain a passive income stream is to invest in the stock market, especially growth stocks. We know the math. If you invested $1,000 in Tesla in 2011, it would be worth $148,405.95 today. So this raises the question: how many shares do you need to invest in a growth stock like Tesla to be able to retire in 2031? How can you save and invest? Keep watching to find out. Financial independence early retirement is a movement of people committed to a program of excessive saving and investing in order to retire much sooner than budgets and typical retirement plans allow. FIRE is inspired by Vicky Rubin and Joe Dominguez's best-selling book, Your Money or Your Life, which states that people should examine every expense in terms of the amount of work hours required to pay for it. The world is changing, and fewer people want to spend their time working at some job for years on end. So what is the solution? Without investing in their pension funds, no one can have a secure retirement. Firefighters invest a higher percentage of their income than the average person. However, the idea of allocating a fixed percentage of your salary each month to investing and doing so as soon as possible can help you grow your retirement savings to the point where it will provide you with financial security in your later years. Answering the question, how much do I need to invest for retirement, is an important component of retirement planning. How many Tesla shares will you need to own to retire? The answer varies from person to person and is mostly determined by your current salary and the retirement lifestyle you want. Knowing how much money you'll need to save by age will help you stay on track and achieve your retirement goals. To calculate the numbers, there are a few things you need to consider: your current salary versus stock prices, taxes, monthly expenses, etc. While it may be tempting to give a general number, the reality is that your retirement savings goal will differ greatly from that of your siblings, neighbors, and even coworkers. This is because the number you will need is determined by some crucial personal characteristics, especially lifestyle choices. According to most experts, your retirement income should be about 80% of your pre-retirement annual salary. This means that if you earned $100,000 a year before retirement, you will need at least $80,000 a year to maintain a comfortable life after retirement. This has not yet taken into account other variables, such as inflation and devaluation of the stocks you are putting your money into. Experts generally say that before you retire, you should save 25 times your annual costs according to the 4% guideline. So, to save $1.25 million for an annual spending of $50,000, you would need $1.25 million to save $2.5 million. For spending $100,000, you would need $2.5 million. You can predict how long it will take to save 25 times your annual costs. With online retirement calculators, it would take about 37 years if you saved 20% and assumed a 5% or 7% after inflation rate of return on your portfolio. If you save 25%, it will be 31 years to retire. By 2031, you will need to increase this percentage of savings and pour most of it into Tesla shares. Don't forget to take inflation into account and how it affects your finances. For example, inflation rates in 2021 alone exceeded 6%, the highest in decades. While this is well above the national average, you must take into account annual inflation, which is around 2%. This is where the concept of investment and compound interest comes into play. In the past 2 years, COVID-19 has brought a wave of early retirements, leaving an estimated 3 million more seniors out of the labor force than would have otherwise been the case. There is no doubt that fear of layoffs contributed to some of these exits. On the other hand, others were thrilled to retire because the value of their assets and homes had risen dramatically. That's the beauty of investing, that you don't have to worry too much about inflation. If anything, it's proven that growth stocks like Tesla will thrive in the coming years. The ongoing decline in its shares appears to have paused, and now its stock price is back up 7% since February 28th. Although Tesla is only about 20 years old, it is already a market leader, paving the way for a more sustainable future. It has attracted a large number of investors who are eager to put their money into its stocks in the hope of generating wealth. Even if it has a lot of promise, it may not be a good investment for everyone. Diversifying your investment portfolio is a key consideration. As we said, you don't want to invest too much in one company or sector because you risk losing a lot of money. This is especially dangerous when it comes to your life savings. Tesla's stock price will also limit the amount you can invest in. Time this video was made, one share was trading at over $870, which may be annoying for some people who only have a few $100s to invest, and for people who can't afford a full share. Fractional shares are a more logical option. However, not all brokers allow you to buy fractional shares of Tesla stock, so keep that in mind when deciding where you want to put your money. Another factor to consider is the future of the company. Experts say the basics of return, growth, and value may make you rich over time, but safety and quality ensure you stay rich, according to the study. Will stocks outperform treasury bills posted in 2017? Stocks outperform treasuries, with 52% of all stocks losing money over time, according to Hendrik Biesenberger of Arizona State University. Carey School of Business from 1926 through 2016. This study looked at nearly 26,000 companies and discovered that about 12% had gone bankrupt. However, we believe Tesla is a good choice for the future, no matter how risky. They have prioritized safety and quality as part of their brand values, and we believe they will go a long way. Tesla ended 2020 with $7.7 billion more cash than its debt, and by 2025, its net cash position is expected to be $24.6 billion. This is due to some of the most significant increases in sales, profits, and cash flows of any company benchmark, not just automakers. Tesla also plans to increase its deliveries from 500,000 in 2020 to nearly 4 million by 2026, so the future looks bright. While this is still about 60% less than what automakers like Toyota and Volkswagen are set to offer, it represents an annual growth rate of 41% and could make early investors very rich. Tesla is expected to become one of the world's most profitable automakers by 2031, thanks to continued improvement in economies of scale and sustainably higher average selling prices. According to a currency price forecast using current statistics, Tesla's stock price is expected to reach $2,500, which is approximately 287% of what it is currently trading for. So, what are other investors saying? While most financial advisors advocate diversification, especially as the bull market continues to push into new territory, Jason DeBolt, a former Google employee, chose a different exit strategy. Like other outspoken Tesla fans before him, they rushed to social media to express their delight at Tesla's windfall. Others, more reserved types, flinched when the Tesla bulls roared. While the future looks bright for Tesla, it is still a very risky stock. In a blog post for The Wealth of Common Sense, DeBolt states, "I would never put my life savings into a single investment that could reach the moon. However, as a diversified investor, I would never lose money." Bolt currently owns 14,850 shares of Tesla stock at an average cost of $58 per share. In 2013, he bought 2,500 shares at $7.50 per share. The payment is now estimated to be worth $2.2 million. DeBolt told Ramp that this company will only take off in the next 50 years. We may never see another Tesla. To summarize, there is no one-size-fits-all for buying Tesla stock to retire and get rich. It varies from person to person based on background, salary, future lifestyle, etc. However, you can use these formulas that we explained in the video to calculate a custom number. Finally, you should probably make sure you're not putting all your eggs in one basket. You may be able to benefit from the expansion of other automakers and renewable energy companies while adding Tesla to your portfolio. If you have other automakers and renewable energy companies in your portfolio to reduce the impact of any particular sector on your savings, you should also invest your money in other sectors in which you do not own shares. How many Tesla shares do you currently own? How much will you need to retire by 2031? Comment below.